I am Joe Gallimore, Director of Investment Management with Argent Bridge Advisors. Welcome to our latest Cup of Joe. Today, I want to talk about chasing stock performance, which can be a very dangerous game. But I want to start out by complimenting everyone because we did not get one single call about GameStop, which is the ridiculous short squeeze meme stock craze that reared its ugly head again. But applause to all our clients. We did not get one single call about that foolish nonsense. So well done. But what I do want to talk about today is NVIDIA. NVIDIA is something everyone is hearing about, and it is a white hot stock that is just trouncing everything today. NVIDIA now has a market cap above $3 trillion. Almost $2 trillion of that has been added in 2024 alone. That is just outrageous. So let's put that into perspective. At $3 trillion, if this company were a country, that would make it the seventh largest company or economy in the world, behind Great Britain, but ahead of France. And at the pace that this stock is growing, it would rank as the third largest economy ahead of Japan at the start of Q4 this year. So, but of course, NVIDIA, it's not an economy, it's a company that sells products and is subject to supply and demand. It's a very different thing. But that is just meant to give you an idea of just how immense of the size and scale that this NVIDIA craze is. So what I want to do today is I want to walk through some recent examples of some high-flying stocks that I hope will serve as cautionary tales for anyone thinking about stepping into the NVIDIA game. And what I'm going to illustrate is the performance of 4 very popular stocks over the past 10 years. And all we want to focus on is the shape of their returns, not so much the numbers on what I'm going to show you. Okay. So the first stock we're looking at is Meta, the dominant social media platform, and still a top 10 stock in the S&P 500. For many years, Meta enjoyed some very nice stock performance and then peaked in September of 2021 and experienced this big valley. In this decline, the stock price went from $382 down to $95. And from where it peaked to where it recovered to that previous peak, that was a span of 3 years. So that's substantial. Now let's look at NVIDIA, the granddaddy of streaming. This darling stock of many people's portfolios also enjoyed very strong performance, peaked about the same time, then experienced a very quick 75% price decline. And this stock has still not gotten up to its previous peak. Now, let's have a look at Tesla, the electric vehicle pioneer, whose high-flying stock performance is well documented. But since 2019, this has been one of the most volatile stocks out there. Certainly, you've heard it all over the headlines. This stock reached the stratosphere back in, I think, November of 2021, and it's experienced several violent price declines ever since then. And you can see how each one of these trumps the next one and makes the previous one look even smaller by scale, which is a very dangerous comparison. And now the piece de resistance, NVIDIA. Just look at this rise. NVIDIA makes the other 3 stocks we just viewed look like relatively smooth rides. And now what I want to say is, if I showed you a picture of this performance without any of the numbers, and then asked you to guess what happens next, what do you think you would say? Now, here's a chart that will look at all this volatility a different way. These are drawdowns, which simply means that when a stock comes to a peak and then declines, how far down does that price decline until it starts to rise again? So first we look at Netflix, and all of these charts look over the past 10 years. We look at Netflix. It experienced multiple 20% price drawdowns and then experienced that 75% price drawdown that we mentioned earlier. Tesla has declined around 30% or greater 4 times, 4 times in the last 10 years. It's lost a third of its value. And NVIDIA, the stock of the moment, the hottest stock around, that's actually experienced 2 50% price declines in the past 6 years alone. So you can see that significant price drops are something that each of these beloved tech stocks experience not too infrequently. Now I want to show you one more chart, which is simply rolling one-year returns for NVIDIA stock. Now, each dot on this chart reflects the performance of NVIDIA stock for the previous 12 months. So say there's an investor around March of 2018, looks at NVIDIA stock and sees that, oh my gosh, the performance of this stock has been about 110% for the past year. Yes, please sign me up. Give me some shares of that. Well, 1 year later, their return on that stock would have been about minus 20%. You can see the same thing would have happened at the end of 2021. Someone looking at NVIDIA said, holy cow, the price has gone up about 125%. And give myself a nice little New Year's present, purchase some shares. Well, 1 year later, their return would have been about minus 50%. Would have lost half their money in that stock. So depending on where you choose to jump in on this timeline, you can see that 2 investors in the same stock could have very different experiences based on when you buy. Now, why are we showing you all these illustrations? Well, we are trying to help you focus on entry point. This is to remind you that you must be cognizant of the price and the performance of what you are buying, because being aware of these factors will set the expectation for your ownership of that stock. What makes investing tolerable, but even more enjoyable, if I may use that word, is setting a context for your expectation when you buy something. If you jump into a stock just totally oblivious to the price and think you're going to enjoy the same returns that it's just had, you're setting yourself up for disaster. And that will likely lead to some very unpleasant emotions, probably anger and despair. Now imagine that if you buy the same stock, knowing how crazy high the price is, but you also tell yourself, I expect this stock to go down, maybe a lot, before it rises from this current level. And I'm committed to holding this beyond the next news cycle, possibly for years to come. If you start your relationship with a stock with that mentality, then your emotional experience of owning it is going to be vastly improved, I promise you, whether you make a profit in the stock or not. So is owning NVIDIA a bad idea? Probably not. Its chips are changing the world. It's the biggest player in the hottest industry right now. But sometimes the only difference between a good investment and a bad investment is the price you pay for it. Or it can be your fortitude to write it out. Well, I hope this was insightful. Thank you very much for watching. If you enjoyed this, please like and subscribe on YouTube. And if you have any questions at all regarding this or anything else, please reach out to anyone at Argent Bridge.